I want to talk to you about accelerated home loan repayments. Accelerated home loan repayments, you might find or you might have heard about through social media that many touted as this magical way of actually paying your home loan off a lot quicker. Now, it does work, but we need to really understand how it actually works to ensure that we are making accelerated repayments so that the loan is going to be paid off a lot faster. Or are we just making a weekly repayment or a fortnightly repayment on our home loan, which won't actually save us much in the time or the interest that we're actually paying on the total loan. Okay, so I'm a big fan of breaking down your monthly home loan repayments into either weekly or fortnightly repayments. Personally, I prefer weekly, but you can do fortnightly. It works the same. The way that the repayment is calculated, there's two different ways. There's a standard way which calculates it over 52 weeks, and then there's the accelerated way, which I'm going to run you through the calculations on how to work out each, so that you understand the reason why you actually will or potentially can save some funds in that home loan. Okay, let's just have a look at a quick example here. If we've got a loan of 600,000 over a 30-year term, interest rate is 6%. Monthly repayments are $3,597. Okay, and we can see it on this chart here, paid off over a 30-year term. Total interest paid $695,000. If we then decide to make weekly accelerated payments, we see that $695,000 interest, total interest paid over the term, reduces to $545,000. Okay, and we're paying the house off in 25 years, not 30 years. Okay, so big savings if we are making that accelerated repayments. If we are just making weekly repayments, we'll see that there's not actually much difference in that total interest that we pay. So monthly repayment 695,000 paid off in 30 years. If we just make the standard weekly repayment, 694,000 what we're paying and still paid off in that 30-year term. So we really need to make sure that we're using a weekly accelerated repayment as opposed to just a standard weekly repayment, to ensure that we're getting that both that interest saving and time saving on the loan. Let's look at how we calculate both of those options. So the standard way to calculate our weekly repayments. We all know that there's 12 months in a year, okay, and 52 weeks in a year. So the standard way of calculating it, we'll take the $3,597 times that by 12, the 12 months in the year. Total is 43,164. Okay. And then we divide that figure by the 52 weeks. Okay. For a weekly repayment of $830. So the key in this is this 52 weeks. Okay. This is the amount that you'll actually pay off under the standard, and it's calculated over 52 weeks. Now, the accelerated repayment is calculated a little bit differently. So what the bank actually does is takes your monthly repayment and they divide that by 4. Okay, so in this example, divided by 4 is $899 a week. Okay, and that's the amount that you're paying. So you can see there that you're paying, whereas a standard way of calculating it, you're paying $830 a week. Under the accelerator repayment, you end up paying $899 a week. So you're paying an extra $69 every week. $69 times by 52 weeks, because we know there's 52 weeks in the year, is an extra $3,588 in extra repayment. So it's equal to 1 month's extra repayment each year. So if we times that over a 25 year period, you can see how that adds up, that you've paid an extra 2 years or just over 2 years in repayments. Okay, paying it quicker saves you interest, and that's where you get that large saving. Now, one just quick thing with the accelerated repayments is looking at the is that monthly amount, monthly repayment divided by 4. Okay, if they're 4 times 12, four repayments times 12 months in the year. So it's basically calculating that that there's only 48 weeks in that year. Okay, which is how we get that higher amount. And then we all know that there's 52 weeks in the year, and then you're making that extra 4 weekly repayments, which gives you that extra $3,588 that you would pay off over that loan. Okay, so back to our chart here, $600,000 mortgage over 30-year term. At 6%, monthly repayment would be $3,597. The total interest paid would be $695,000. $695,000. Now, if we look at the weekly accelerated repayments, that is reducing to $545,000 over that loan term. Okay, it's a saving of $149,000. Okay, so almost $150,000 saving just by making that weekly accelerated repayment. So where you're making an extra repayment each year, an extra month's repayment each year. Now the figures won't differ much if you are just instead of making weekly accelerated payments, you're paying monthly, but then you physically pay an extra 1 month each year. The figures will come out pretty close. There's not going to be much difference between paying it weekly or paying it monthly. As we saw in the first example, if we just calculate it the normal way over 52 weeks, paying it monthly would be $695,000 for the year. Paying it weekly would be $694,000 a year. It's only about $1,000 difference by just only paying it weekly, but paying the same amount, but weekly. So there is a little bit of saving, but yeah, not a massive amount. Where the lion's share of the saving is that you're making extra repayments to the loan. Okay, that extra 1 month a year will give you a lot larger saving.